Former President Trump to give his keynote speech tonight and accept the GOP nomination at the Republican National Convention. This comes as more reports question President Biden's future on the Democratic ticket. Let's bring in Julian Emanuel, Evercore ISI's chief equity derivatives and quantitative strategist, who recently published a note on what a Biden or Trump win could mean for your portfolio. Julian, before we go into the politics part, I got to back up and talk about the overall market for a minute, because exactly a month ago we had you on when you raised your S&P target to 6,000. Right now we're at around 55.45. You said the growth trade still had more room to run. Since then, we've seen this rotation out of the Mag 7 into small caps, but then that looks shaky now for a couple of days. Can the S&P hit 6,000 while rotating into small caps if that continues?
We actually think so, John. The internals of the market are very healthy. Things that people sort of the second derivative advancers over decliners, very, very healthy. And frankly, some of this action away from the Mag 7, as sort of uncomfortable as it has felt, is ultimately, we think, going to be healthy. Look, if you look at the last several months, we've literally gone up in a straight line until the last 3 or 4 days. So to us, we're not bothered by this pullback here. We think ultimately it's going to be a buying opportunity. But frankly, when you look at the political situation and the backdrop, the escalating rhetoric in light of this straight line move and the rotation, which has unnerved some investors, there's likely to be more volatility before that next high value buying opportunity emerges.
Yeah, Julian, NVIDIA is arguably the poster child of the rally. We saw it get smacked a couple days ago when former President Trump made some comments about Taiwan. And then there's President Biden, who faces criticism for not being pro-business enough. Depending on who's winning, is there enough stability in the market to march higher with that kind of consistency?
Well, we think so. And actually, if you think about it, right, we all know that the only thing that Democrats and Republicans seemingly have been able to agree on for the last year or two is being tough on China. Now, in a lot of ways, it's surprising that that rhetoric hadn't amplified until now. Obviously, the fact that the Republican convention is this week, and as you mentioned, former President Trump is going to accept the nomination tonight, and obviously the issues going on within the Democratic Party have been catalysts for upping of that rhetoric. But again, the stocks themselves might not have responded in the way that they've done the last couple of days if they hadn't advanced so much in the last really several months to begin with.
It's not just who assumes the Oval Office coming out of the November election. It's also what the makeup of Congress looks like, right? So we just had it up on the screen right there. Red versus blue portfolio. I would add purple in there, too. And historically, there's this narrative in the market that if you have that uncertainty is good, right, for the market. And if you have a government that is mixed, Republican versus Democrat, maybe a Congress that's the opposite party of the president, that's good for the market. Is that actually true? How does that factor into how you're gaming out the different investing possibilities here?
In the panoply of investment memes, that could be one of the biggest misnomers there are. And I would suspect 4 years from now, when we're talking about this, people will still be amazed. But if you look at 100 years worth of market history, unified government, when you have one party in control of both houses of Congress and the White House, outperforms divided government by almost 300 basis points per year. It's really quite simple, but very effective.
What's the bond market telling us? And how is that, I guess, giving its cue to the equity market here as you do start to see the possibilities priced in?
Well, what's interesting is the narrative a couple of weeks ago when it was clear that Trump's candidacy was gaining momentum in the eyes of investors, certainly coming off of that debate on June the 27th, was the inflation story was going to take hold again. bond yields would go higher. And actually, that didn't happen, partly because the CPI on the 11th surprised to the downside, which we think is going to be part of the unfolding story. But really, because, again, there's the push-pull between an economy that is slowing and a Fed that is ready to cut rates. And so for us, the bond market is actually not telling that much of a story, and is probably one of the places that are perhaps more stable than otherwise we're seeing in the volatility in the equity market.